community banks and credit unions have such a great opportunity, not just because they bank half of America, but because the products they offer are generally more suitable and helpful in a time of need. And guess what? That's a match in the world. Your product matches what someone needs. What we need to do is figure out, how do you match that up with someone? Well, you need to know their goals, and you need to know where they're at in their finances outside of where they bank with you. That's the starting point, so we can start connecting the dots here.
The Digital Banking Podcast is powered by Tyfone. Tyfone is the creator of Infinia, a dramatically better digital banking platform for community financial institutions, as well as several platform-agnostic, revenue-generating point solutions. Our highly configurable platform and broad ecosystem of third-party partners ensure our entire suite is scalable and extensible to meet the needs of any FI. On our podcast, you will hear host Josh DeTar discuss today's most pressing financial technology topics with seasoned industry experts from every possible discipline.
You know, your podcast hasn't officially made it until there's ads in it. But this is one you're not going to want to skip past. And, well, if you do, feel free to hit that fast forward 15 seconds button twice. Ever wonder what gives me my energy and enthusiasm during these podcasts? You know, outside of my relentless desire to learn about, connect, share, and build up community FIs and their mission to support the communities they serve? It's coffee, and lots of it. Now, you want to know what's better than your regular old coffee? How about donating $5 to the Children's Miracle Network hospitals through Credit Unions for Kids every time you purchase high-quality, ethically sourced coffee that also provides living wages to coffee farmers. So if you want to listen to this episode with epic levels of caffeine-induced focus and help kids in need, head to javaforkids.org to learn more and buy a bag or 10. Thanks.
Welcome to another episode of the Digital Banking Podcast. My guest today is Crissi Cole, the founder and CEO of Penny Finance. You know the old joke? Think back to like your college days here, of the saying, you need a friend like this. When you're sitting in jail saying, man, that was fun. I'm the friend sitting next to you saying, yeah, it was. Well, that's not Crissi. Crissi is the friend you call when you realize, okay, that was fun, but now we're stuck in jail and we need somebody to help us out of this mess. Crissi said her deep desire is to be seen as dependable. She's there for people when they need it. She shows up when she says she will, and she does what she says she will. As an older sister and a former teacher's pet, she felt this role was kind of always her lot in life, and she actually finds true joy in it. The desire to show up, stand the test of time, and do the hard work also created a foundation of resiliency. It's also what led her into the fast-paced, high-stakes, high-stress world of Goldman Sachs. And after 10 years of pouring her energy into her corporate career, Crissi had her own epiphany moment of securing her own personal financial health and freedom. And this was so powerful, invigorating, and moving to her, she said she felt free. And she wanted everyone to experience this amazing feeling. So what did she do? The most financially irresponsible thing she possibly could. She quit her job and started her own company. Look, once she saw the light of bringing financial health to others, she said she just could not shake that this was her new greatest mission in life, outside of being a wife and a mom. So while she took a step back in her own personal financial stability, in her eyes, it will all be worth it if she helps others experience financial freedom. Listeners of this show are no stranger to my own passion for this topic, and I'm super excited to have Crissi on to talk about the science, the data, and the no-holds-barred thoughts she has on how we truly empower people's financial health, future, and freedom. So Crissi, welcome to the show.
Thank you for having me. And you know, it's so terrifying. My 3-year-old daughter is a clone of me. So that poor
Oh
girl.
gosh.
But so there'll be another person in the world people can call when they're in jail.
Isn't that funny how, like, I don't know about for you, but it's so interesting to watch what traits of us our kids pick up.
Yeah. Yes.
And like how they're the same yet so different. And yeah, some of those things I look at in my kids and I'm like, oh, I'm so glad you got that. And some of them I'm like, that's terrifying because I know where that leads.
I'm so sorry. Now you know the burden of this.
No, but man, I tell you what, like as an outsider looking in, right? You are a total BA. And if your daughter grows up to be anything like you, like she's got a really bright future ahead of her. So I think that's something to be really proud of. And, you know, again, people who've listened to this show are kind of no stranger to, I always love having founders and CEOs on the show. We were even talking about this before we started recording. Like, I make the statement, I love to be a great number two, but I have no desire to be number one. I have no desire to start anything. And so it's always really fascinating to hear people's origin stories.
Yeah.
And I really think yours is important to tell because I think it sets a lot of the tone for the conversation that we're going to have today. So tell us a little bit about, like, go back in time, but then bring us back to the point where what made you say, hey, I just worked so hard to kind of achieve financial stability. It's so important that I wreck it for this cause.
Yeah. And I wish you had my husband on here so he could tell his version of the story. Two opposite viewpoints. What I didn't tell you, Josh, is in that decade career at Goldman, I was also the friend people would call for financial advice because I was the one that worked in wealth management. And when you get asked the same question over and over and over again, especially if you're like a problem solving kind of person like me, you can't help but be like, wait a second, like what is wrong in the world? Like, why is everybody asking me the same thing over and over again? Like there's obviously a gap in the market. And so the light bulb was not only, oh, I finally got paid off my student loans and I don't have unpaid credit card bills and I'm not putting my rent on credit card. It wasn't just that. It was, oh my God, like there is no home for people who don't have 100K in the bank. No place for them to go. And once I connected the dots in my brain around like, oh, people are asking me this over and over again. Oh, I think I know the answer. And I think I'm crazy enough to go try to build the thing to solve this. Once I got that idea in my mind, I could not detach from it. It's all I was thinking about. And when you have this idea that lights you up, it makes you do irrational things like what I did, which is go quit my job and then tell my husband after I quit my job. This is what I'm doing.
He appreciated that, yeah. I don't know about for you, but I think one of the other things that I had kind of a personal realization around was like this stuff was important to me before, but when I became a parent, I think I took on even another lens of that. And you look at, and I'm sorry, I'm just going to say, you know, what I see, but the problem is that generational wealth and generational financial instability, like we see both of those things.
Yeah.
Right. And so it's, you know, the path is there when you've got healthy financial habits and money available to the next generation. And it just makes it easier and easier and easier for every subsequent generation to be financially stable, right? That compounds. Yep. But I think what we also don't talk about a lot of times is the inverse of that, is the compounding element of the financial instability.
Yeah.
And how that continues to pass down to kids. And so for me, like when we had kids, I was like, oh my gosh, like this is that much more important that I set up the proper compound for them, because literally the choices that I make now today can have all the difference in the world in my kids being able to own a home, go to college, like do all of those things. And kind of bringing it back to for you, like that starts with you. That starts with you as the parent, or even before you're a parent. And you're right. Like even so many people in my friend circle and our age group are like asking silly questions. And they're not silly questions because they just haven't been given the answers.
And you know why I think that is? And I've read so many things and met so many people. So there's like what you read and then practice.
Yeah.
I think the trade secrets, so to speak, of like how you create wealth and keep wealth, they're in the four walls of where the wealth exists. And that's what I saw at Goldman, right? I'm like, none of this is like crazy hard to understand or something that we can't share with everyone. What ends up happening is the wealth gap widens because those trade secrets are not disseminated to people who don't have the opportunity to hear what I heard on the 39th floor of Goldman Sachs, right? And if you don't get those trade secrets in your life and or you don't learn it at some point in your life, and not every state in America teaches personal finance, how could you be expected to get on the journey to wealth if you don't know what to do? I think it's that simple.
Yeah.
How do you do that? How do you do it? Someone has to tell you. Someone has to teach you, or you need to have seen it from a parent, or you're inheriting wealth. And even people that inherit wealth, there's data that shows if they're not in a position where they know what to do or competent with what to do, then they're not able to preserve that wealth. So it's so important that these trade secrets, I call, they need to get out into the world somehow.
Yeah. That's funny. You made me it's like telling somebody who doesn't know how to play chess. It's like, how can you not know how to play chess? Nobody taught me.
Yeah.
It's really, yes, it is a complicated game, but it's not that complicated to just start playing.
Right.
But if nobody teaches you the basic rules of like a pawn can do this, the queen can do this, you can't play chess.
Right. And the stat that I always point to that sort of brings this home for me is if you look at the stats of how many people in America are investing, because arguably you'd say that's like one of the largest levers you can pull to grow your wealth and compound your wealth is investing. If you look at the data from 30 years ago, 60% of people were investing. If you look at the data today, guess what it is?
Oh man, I'm going to lowball it because I hate that I'm going to probably be right then, like 5%.
No, it's the same, 61%.
Fascinating.
We have made zero progress in 30 years. Yet, how many robo-advisors exist? 150? Like, there's all these innovations that have been created to make investing easier.
Yeah.
No free trading everywhere. You can go to any brokerage firm and place a trade for free. You can open a Robinhood app and place a trade for free. Why are people still not investing? I'm like, we're doing something wrong.
Yeah.
As an industry, if we are at the same rates as we were 30 years ago.
So let's go back though. You kind of went through this own journey for yourself, right? And paid down debts, got to a place where you felt really financially free. What were some of the things that you learned through that process that maybe frustrated you and you were like, man, I really wish other people just knew these quote trade secrets?
There's many, but I'd say the first is just because you have debt doesn't mean you can't start investing. And you can start investing with $100, not thousands of dollars. And one thing I'm so glad I did is I started contributing to my 401k in the first day of my job, even though I had a shit ton of debt and was literally paying for my New York City apartment on my credit card. Because I learned from my mom at a very young age that investing is critically important. You can't out-earn investing with saving. And one of the things that in that vein is not only should you do them at the same time, not wait till you're debt free, because the power of time is the world tells you need to max out your 401k and like you got to put 10% of your salary and all of these like random rules of thumb. I think all of those are false. And that's what I learned. I never maxed out my 401k ever. I never had the opportunity to do that because I had all this debt that I was managing, but it still worked because I started when I was 22.
Yeah.
And so investments, just to recap, not waiting to start investing, not thinking that you have to have so much or do so much, right? Start small. And then just doing it, the act of doing it teaches you.
Yeah.
Yes, I think a lot of people will say, well, Crissi, you worked in wealth management. This is what you studied. This is what you did. Of course you felt comfortable doing this. I would argue, well, no, because in the first year of me working there, nobody taught me asset allocation. Like you have to figure it out for yourself and do it and not wait till you feel 100% confident. And so those I'd say would be like the three big things. And then the fourth thing is like, there's always an option. There's always a tool. Guess who used 0% credit cards up the wazoo all of my 20s? I did. So many people don't even know what a 0% credit card is or how to use it in a smart way. And so I think being financially creative and open to options that the world or the culture might tell you, oh, a 0% credit card, that's not good for your credit. Don't do it, right? Thinking about there's always trade-offs. And what are you solving for? And that you have more options than you think, even if you don't have much left over from your paycheck at the end of every month. Like you can get into the game.
I'm curious what your perspective is on this, because this is just my own like N of one. Do you think that people think that investing is an all or nothing game? Like I either have to be able to go all in or nothing. And so a lot of times they default to nothing.
Yes,
'Cause
absolutely.
I remember I'll overshare on my own personal side, right? And I literally saved this example, Crissi, going back to like watching our kids, right?
Yeah.
I 100% know that at some point in my son's life, he's going to need to hear this lesson that I learned. And I'm going to hope that it helps change his trajectory.
Yeah.
But, you know, if you go all the way back, I had a really bad financial start, right?
Nice.
And I'm very, very fortunate that at 18, I was saved by a credit union and they took me under their wing. And so, you know, fast forward over the next couple of years, I managed to land, especially for the area that I was in, a really high paying job in manufacturing. And I was doing really, really well. I was starting to set aside a lot of money. And I put a bunch of money just straight into savings. And I literally did nothing with it other than savings until my dirty little hobby from many years of growing up in a hot rod family is racing cars. And I remember writing a check for $22,000 for a new engine for the race car at 21. And the lesson that I learned is, man, I didn't actually start saving and investing into my future until almost 30. Could you imagine if I'd put that $20,000 into some form of investment arm at 21? To your point, like you can't outpace the compounding of money.
You cannot.
Right? And so I go back and I'm like, man, I lost 10 years of compounding that money that I'll never be able to get back. And it's not just do 10 more years. That's not how that works.
Right.
Right?
Right.
And so that's my own personal story of like going back. I remember thinking $20,000 was a lot to me, but it wasn't enough to go hire some fancy investment broker and do all of these things with it.
They wouldn't let you.
Yeah. So I was like, so I might as well blow it on a race car.
Yeah. And look, I'd say those less like, and again, that's what you will eventually pass on. But guess what? Your son might do something like that. And what I would argue is I think that there's so much shame and anxiety with your money and your wallet that, and I'm not your therapist, Josh, but I will for a second, is like, you can't have any regrets. You just, you start now. It's like, obviously what happened at 30, what got you to be like, oh, okay, now I know more. Let me do this now. I will not wait another second.
Yep.
What happened?
I mean, for me, it was getting my first job that actually offered a good 401k. And that was what got it going.
Yeah.
And then that got me interested enough that I had a friend who was a partner for Waddell and Reed. And I got him to sponsor me to take my Series 7 and 66. So fun fact, if you want to know how crazy I am, I took those for fun. I never planned on doing anything with it. But yeah. But I wanted that knowledge because then like you, once that got opened up to me, I was like, oh crap. Like I can't just bury my head in the sand.
Right.
Like I have to, your point is exactly right. Like I was like, I have to draw the line.
Yeah.
And from this point forward, I have to be different. I can't do anything about what came before it, but from this point forward, I can be different. And so I had to draw that line.
And I love hearing the stories of what got people to like shift their thinking. Like, what was it? Because I think if we can all come together and like put together enough of those examples and then insert them in every 22-year-old's life or 16-year-old or 12-year-old, however far we can go down, That's how you close the wealth gap. That's how you create wealth, is we got to get those learnings out to people without having them have to take the Series 7 or 66. I mean, I failed the 66 twice. I had to retake it.
That thing's no fun. Neither of them are actually fun.
There's got to be an easier way to get that knowledge out to people.
Yeah. Yeah. What did it take? Like 8 hours for the Series 7? I mean, it's absurd. Yeah. Right. But you want to know what's crazy about that too, Crissi? I don't know if this is probably less true for you than me, but because I never actually put it into practice and it was never my day job, I would absolutely tell you that I've forgotten probably 75% of that too. Yep. Right. And I've probably only put into practice a small percentage of that. But what it taught was, I think, some just different mindset that I didn't have before. Right. So I'm curious, as you've kind of like dived into what you were just talking about, like almost the psychology of money for people, what kinds of things have you found interesting? Because yeah, it is. It's like, it's almost this taboo topic.
It's so taboo. I mean, that's the one thing. It's like money and religion or money and politics. It's like a tough thing to talk about, yet it rules every day of our life. Like it's almost every moment in our life, there's something financial happening. Oh, there's so much. Where do I start? I think the first thing is budgeting. And we've talked about this, and I want you. I'm gonna poke you on this one because I have a strong stance on this, and I'm curious your stance from a data perspective, and then I'll tell you from a psychological perspective what I've learned. The data shows like 87% of people don't stick to a budget. Yeah. Right? It's one of the first fundamental things we learn about money ever in our life. Why? I've tried to like understand why. What is the problem here? Because a budget inherently is setting a limit against yourself for something. A budget is also a lot of numbers and a lot of different categories that your brain cannot remember. Mm-hmm. What does the human brain do? The human brain pushes through limits. That's what we do. That's psychology. We don't want limits set on ourselves. We want structure, but we want rules, but we don't want limits. And so that is why budgets fundamentally, from what I can see, don't work. And that's the first thing. The second thing is, in practice, the people who do budget and who budget well, maybe that works for their brain, but that might not necessarily create wealth for them. Like, we have to go back to, what are we solving for? Okay, you cut $100 from your budget, or you spend the same amount every month. Okay, but what did you do with those dollars? Mm-hmm. And so what I have found psychologically for people that is more helpful is you think about your goal. You understand your spending, and you might have a budget number. What you do, how you take action against your goals to achieve your dreams, is much more powerful and motivating than being on a strict budget.
I want to come back to the goals thing, because I think this is probably one of the biggest conversations I want to have with you. But on the budget side, I really agree with you.
Do you stick to a budget?
No. So, okay, again, I'm an open book. I'm completely overshare, because I want people to learn from right, wrong, or indifferent, like the lessons that I've learned or seen, right? And maybe you can laugh at me next time you see me at a conference or something. I don't know. But here's my thought on budgets. One, I agree there's a huge problem with the whole idea of setting categories and limits to each of those categories, right? Because I can give you a really simple example of how even in my own life, that goes south so fast in almost every single time, right? Let's just say, for whatever reason, we put a $500 limit this month on groceries, right? And we've already spent $490 on the grocery budget. And then we forget, oh crap, we were snack parents for the kids' t-ball game this week. We have to buy snacks. So now I'm over on that budget, right? Yep. And then I look at my budget, I'm like, you know what, that's fine, because we didn't, spend this money from the gas category. And then all of a sudden I realize I've got to go run an errand or something on the other side of town, and now I need extra gas. I'm like, well, I can't not have gas in the car. I have to do this thing. And now all of a sudden I've blown through both of those budgets, where in my head I said it's okay to blow through this one because I'm going to save on this one. And then something came up and this one blew through too, right?
And how do you feel after that? You feel like crap.
You feel like crap because you feel like a failure.
You spend all this energy on $5 here and there. when you could be
Yeah.
spending that energy on something else.
And again, right? I'm not generalizing. I'm going to use myself
Yeah.
as the example, but I'm the same with peanut M&Ms, right?
Okay.
I have 100% control over peanut M&Ms. If I see a bowl of peanut M&Ms sitting on a table, I can eat none of them until I eat one.
What? Yep.
And then I'm like, screw it. I've had one. And then Crissi, it doesn't matter. That could be the 5-pound Costco bag of peanut M&Ms. I'm going to eat that whole thing to the bottom. Right? And so it's kind of the same thing with the budget. It's like, well, once I've blown it, like, screw it. It's already blown. I'm already a failure. I might as well just blow it.
Right.
Right. And so then that almost creates the habitual process of just, it's okay to blow through the budget.
It's okay. And that's what we do in our head. The second you get to the limit, you just rationalize it every month. And then it's like, well, this was not effective.
What was the point?
Yeah.
So, what was interesting too, so again, I told you I'd kind of overshare. One of the things that my wife and I found really interesting too is when we came together, and then fast forward, 10 years later, like our incomes had changed pretty significantly through that time period. And, we got to a point that I actually argue is a fairly dangerous point for people to get to. We are not rich. We're not swimming in money. Right. But we also weren't living paycheck to paycheck anymore. We'd gotten past that point.
Yep.
Like we'd gotten to a decent, stable point where we owned our home, our cars, like all of those things. And then what we found, Crissi, was actually where we were the worst about managing our money, is because we had enough to not really worry about stupid little spends. Right.
But
we didn't have enough to just buy whatever we wanted whenever we wanted.
Right.
And so we got into this habit of like not even realizing that we were spending money.
Right.
Until you were like, oh crap, we kind of overspent last month.
Yep. And it's good to know that, and it's good to be aware of that. And I think it's important. I'm not saying like throw the whole budgeting concept out the window, because you need to know how you're tracking. Our view, and I think this would have helped you and your wife, is are the must-pay expenses to live your life? Give yourself a little wiggle room and you lock it in. You don't even think about that. It's done. You got to drive to work. You got to drive to T-ball. You have to put food on the table. You have to do these things. What's left over? Remember that one single number.
Yeah.
Is it $500? Is it $1,000? Is it $3,000? And then you and your wife sit down and say, what do we want to accomplish with this $2,000 we have left over every month? And when you only have to remember one thing, it becomes much more effective at influencing mindful spending. You go to buy something that is not significant and you're like, well, maybe I don't want to buy that thing. Or you go to buy the T-ball snacks and you're like, this is an important purchase because I'm supporting my kid and his team, right?
Yeah. I'm curious. So that leads us back to the goals thing. I do want to come back to that.
All about goals.
I'm curious what your thoughts on this were. And what's funny is I even brought this up on a recent podcast and then still didn't do it. And so I'm gonna write a note on my whiteboard and we're gonna go back to this, maybe, unless you give me a better idea. But you know what actually worked for my wife and I? And this is gonna sound really silly and stupid, but I think it kind of speaks to what you were talking about. It's just some of the accountability of the purchases. Is we literally used to keep just a 7-day calendar piece of paper on the kitchen counter. And it just had Monday, Tuesday, Wednesday, right? And anytime you spent money, everything from $5 to 10 grand, didn't matter. You had to write it on the sheet. And each of my wife and I got a colored pen.
That seems like a lot of work, Josh.
You know what it was? It was a lot of work. And man, did it not, but it worked. Because what it did was I literally would go to buy something and be like, do I really want to go walk out to the kitchen to put that on the paper? I'm like, I don't need it that bad. And then the worst was Erica's going to look at that piece of paper later. She really do I really want to explain that car part to her, or do I want to just not, And so, why I say I'm curious your thoughts on it is because, it was a lot of work, right? I actually argue that it was a little bit on the negative behavior side too, right? And I'm very fortunate that my wife and I have a really good relationship where we can talk about these kinds of things. And it wasn't like we didn't beat each other up or demean each other over purchases, but it did give that level of accountability.
Yeah.
But even then it was still kind of negative, oh, did you really spend that on that? So I don't know.
I think so. Oh, and I've hidden credit cards from my husband many a times. Because I don't want him judging me. I'm like, you spent that much on clothing? What? I think, no, I love it. I think for everyone, they need a different sort of accountability mechanism. And each person is different depending on their relationship with money and how shameful they are about it or how much they need to monitor that. Like everyone's different, right? Like my husband's really conservative and doesn't spend on anything. I'm the opposite. So there's another little hack that I'll share, and this might be helpful for you, and you'll like not it'll be less time consuming because I imagine you don't have a lot of time to do that. Is some people when they find they're overspending in a certain category will have their own dedicated credit card for that type of spending. For example, I hear all the time, I one click buy on Amazon, way too much, it's just too easy.
Yeah.
Okay. Have your own credit card designated for Amazon that's not muddied up with everything else so that you can just look at it at any point in time and see like, what did it all add up to? What am I at? I'm at $500 this month, or I'm at $2,000 this month. And it also forces you to get out a different card to go pay for it. That's a hack we've seen in the world for people who feel like I want to really cut my spending in X category and just like know what it is all amounting to be. Because seeing it line by line category is like, it's sometimes helpful for awareness, but it's like this exercise that nobody wants to do. Like, do you really want to go sit and look at your categorized expenses?
Yeah. No.
No, thanks.
No, and it's money anyway, right? No, that's a great idea. Actually, I recently did something somewhat similar, but, I use a personal card for all of my work expenses. So I get the points.
Yep.
Shout out to my company. Thank you for that perk. It's awesome. But totally, Crissi, one of the things that I noticed is I was like, I've given the company a ton of money over the years because I'll buy a water at the airport or something like that. And I just don't do the expense report for it or whatever it may be. And it just gets so buried in all of my transactions in my personal life. And I just never go audit it. And I'm like, I'm pretty sure these are the expenses that I at least took the time to take the picture of the receipt for on my trip. And we even use the super awesome Expensify tool for expenses, which huge shout out to Expensify. You guys are amazing. Killer product. But again, it's just, did I bother to take the picture of it? Did I bother to get the receipt of that? Am I willing to just whatever, screw it? And so finally, I just put all of my work stuff on a different personal card. So now I just have two of the same personal cards. And one of them we use for our actual personal, and the other one I use for the work side of things. And it's so much easier to just audit trail it and be like, hey, my expense report was $1,112.36. Is that what's on my card? Yes.
Yep.
Cool. We're good. I'm done.
Exactly. It's like a little organizational hack that does the math and summarizes it for you. So you don't need to go decompose the $12,000 credit card bill for everything in your life.
Yeah. Yeah. Well, and that was one of the other challenges that I found too, is like, then it overinflated what, my personal spend may have only been this, but like it was a crazy busy, travel schedule for work. And it's like 10 different flights and, 12 different hotels and all of this. And all of a sudden that credit card bill looks really ominous. And you're like, oh, wait, well, which of that is actually the work stuff? So that's a good idea to even, if there's a certain category that you're like, hey, and Amazon, it's probably, I think all of us are sitting there nodding like, yeah, that's probably
no one
one.
from Amazon's listening. They're not going to
But okay, I wanted to go back to, you've touched on a couple of times goals. And I think this is actually one of the things that you and I like first bonded over when we started talking about this, is because I think for me, this is the fundamental problem I've always had with like traditional PFM tools too, is that they don't take into consideration what your actual goal is. Yeah. And we all have different definitions of success, right? And I know I've used this example in the past, but I think it's relevant to use to kind of set the stage here. I mean, I literally have, within a very small circle of friends, we've talked about what does financial success look like. I have one set of friends that are on the FIRE program, right? The financially independent, retire early.
Yeah.
And Crissi, they will not spend like a single penny that they don't absolutely have to. right? Like no,
Because they said my goal
nothing.
is to
That's
freaking
my goal,
working as quickly as
right?
physically possible. And nothing's going to get in my way.
Nothing's going to get in the way of that,
Yeah.
right? I have another friend who's like, I could die tomorrow. I might as well spend everything now and enjoy every penny of it, like rock on. And just constantly floating different debt over to this debt and spend like crazy, right? And then you look at my wife and we were actually closer to our friends of being hyper conservative. And everything was focused on retirement, right? We put every extra penny that we had into 401ks, our investments, our stock portfolios, different assets. Like that was the goal. And then when my wife had breast cancer and she got through that, that changed everything. And we literally had a sit down where we talked about, we have a new definition of success. And we were like, yes, we're not going to go all the way to the end of just like spend everything we could die tomorrow.
Yeah.
We still have like, we want a family. We want to have kids that we set up for success. Like we want to make sure that if we do happen to manage to live to be 104, like we can afford that, right? We still want to do that. But at the same time, we do want to try and live a little bit more in the moment.
Okay.
So we redefined our definition of success.
That's beautiful. I love
But
that.
I think the problem is that a lot of the traditional PFM tools just say all three groups of those people, same definition of success.
Same
Here's
definition.
a budget. You're good.
Here's a budget. We're going to retire at 65. You're not on track. Good luck.
Yeah.
And that's not fair because there's so many versions in the middle and your goals can change. So that needs to be an evolving thing. I think a great example that I like to give people is like debt. Okay. The world thinks you should be debt free. Argument I could make. Well, maybe some industries don't. They want to sell you personal loans and credit cards and you to be in debt forever. But let's just argue like the financial habit is you need to be debt free. Well, everyone has a different comfortability with debt. You might go to bed every night and be like, I can't sleep because I have these student loans. And I want to pay, my goal is I want to pay them off as quickly as possible because for me, what feels good to me is to be debt free. Then there's me. I don't care if it's 7 years, 9 years, 12 years. I just want to know I'm on track to pay them off eventually and my payment is right sized.
Yeah.
PFM solutions can't dictate what the right years till debt free should be. You are the only person who gets to decide that. Right? All we can do is share with people what are the trade-offs? Like, what are the options? If you're going to be debt-free in 9 years, this is your payment. What does it look like if you took $100 from your debt payment and put it in retirement? Is that 12 years now debt-free? How do you feel about that? Does that feel good to you? Lock it in. Or in the reverse, what if you paid $100 more towards it? How does it chip away at it? That's where I think we need to go because personal finances isn't black and white.
Yeah.
Who am I or you to tell somebody you need to pay off your debt in 5 years? Who cares? Why? Because you're paying interest? Okay. But debt was a tool to get to something in your life.
Yeah.
Maybe it's your car payment, whatever, right? I think I would like to see the industry move towards more acceptable of maybe the math doesn't math perfectly, but it feels good to you. And that is the only thing that matters.
I think that like personal finance is not black and white.
It's not.
Right? And this goes back to, what is your definition of success? What are your goals? What are you comfortable with? And I think a lot of that too comes down to your understanding of the systems. I remember having an argument with a friend once. This would have been a couple of years ago. I could probably tell you exactly when I tell you about the rate on this. You could probably pinpoint the time. I remember having an argument with a friend about why, when I bought a car, I had financed it as opposed to not financing it.
Yeah.
And it was at the time where my credit union's auto rate on a new car, it was 1.99%. And I was like, that's free money to me.
Right?
Like,
Yes.
that payment was no problem for me.
Yep.
Right? And I said, all of that cash that I would have just put into a depreciating asset. I said, I literally just put into our aggressive stock portfolio that I don't need to touch for the next 30 years. And I
That would
said, I
probably
guarantee you
earn
over the next 30 years, I'm going to make more than the 1.99 I'm going to spend on this cost of capital for this car.
right.
But for him, that was like a hard no-go. That was debt. Debt was not okay. Right?
Yep. And that is the perfect example of neither of you were wrong.
Yes. Great
But
point.
the industry will tell you that you are, and then you each wonder, you second guess, you're like, did I do the right thing? Now I feel shitty about this car loan. Well,
Yeah.
no, that's leverage, right? If you can earn more than 2% in the market and that's what you're going to do, great. And maybe it impacted your credit score for a hot second. If you didn't need that credit score to do anything else in your financial life and it didn't hurt anything, like prohibit you from reaching your other goals, great. But your friend, if he maybe can't sleep at night, if he had a car loan, fine, don't get a car loan.
Yeah.
There's no right way. It's whatever you're solving for. And I think where I think people get stuck is when you have competing priorities. It's really hard to figure out what to do. I want to save for a down payment on a home and save for retirement and pay down my debt. And how do they all work alongside each other and impact each other? That's when things get a little more complicated, and you might want a little more support figuring that out and understanding that. But again, no right answer to the way that you balance those things.
Yeah. And one of the other things I find really fascinating about money is everybody's got an opinion,
Yes,
right?
yes.
Like, and everybody wants to
Especially your
judge. Yeah. And everybody wants to judge your decisions. And I'm drawing this back to even how like traditional budgeting and PFM tools have thought about it. Everybody, kind of to your point, wants to judge you based on maybe this one decision without looking at the entire thing, right? And again, I like to use myself as a personal example because I can throw shade on myself and I know all the details. But it's like, yes, still to this day, fast forward, and I'd like to think I don't make as many of the stupid decisions of like, being a 21-year-old buying a $20,000 motor for the race car. But I still love cars. Like, that's just been a part of my DNA. It's been a part of my like upbringing. I love doing that and tinkering on them with my son. And so sometimes people look at the cars and they're like, oh, must be spending too much money there or whatever it may be. Crissi, you realize the only clothes I have are Nike basketball shorts. And my wife got me when she still worked at Nike for free as samples, and
Yep.
Tyfone t-shirts. Like, my poor wife, I don't think she sees me in anything else. I'm amazed she's still attracted to me. I eat the exact same thing from bulk Costco every single day for lunch, right? Like, I'm one of those guys that I don't spend a dime except for one area. And so kind of going back to the PFMs, right? Like, a lot of times those tools look at, oh, you spend way too much money here. And they make you feel bad about it.
Right.
But they don't take into consideration, okay, well, your mortgage is paid, your health insurance is paid, you are saving for your kids' college fund, all of your other necessities, like you were saying, are met. And so therefore the bucket is left over here and you're fine within the bucket. But if you look at it almost too granular and one thing seems out of skew without taking the whole financial picture into it, like then again, it becomes a very emotional thing.
And that's not, and I really hope for the industry we can get out of this, like, let's set these rule of thumb things for everyone. Like, you should spend 20% on this and you should put 10% in 401k and then all these percentages, because it's your money and you should do whatever the hell you want to do with it. Right?
Yeah.
And the only
I'd argue that's
judging
true.
that needs to go down or guardrails that need to happen is calling out when there's an opportunity to do better, right? Like, oh, you're not paying the minimum payment on your debt. You're never going to pay it off. That's a call out, right? Of like, we're not going to judge people, but we're going to call it out as like, that's an opportunity to make sure that you're not just paying indefinitely for the rest of your life to the bank and then you don't have anything to show for it. And or you get charged credit card fees. Like, opportunities. Yes, you got charged the credit card fee. We can't judge people that you got charged the credit card fee. We need to say, you got charged this fee. Here's a solution. Let me help you, right? Because the problem is we love to not we, I'm just saying the industry just loves to be like, you're not doing this well, but not give the solution, which is, okay, how about we use a 0% card for a temporary period of time? How about we look at spending for a period of time? How about we look at all of your debt and maybe we can negotiate medical bills? Like there's so many levers that you can pull, and I'm just not seeing those out in the public sphere for people to actually help them. What I see is all the predatory stuff. And that's just not cool. Like we got to get away from that.
Well, and this, I feel like I'm going to set you up for this, but
God.
you know, this is the opportunity of the community financial institution space, right? Again, you go back to my story, and it was because somebody at a credit union cared, and they had enough working knowledge of the financial systems and the tools available to me and helped educate me.
Yeah.
Right? It was as simple as that. And so community financial institutions, credit unions, community banks, like they represent the good guys in this scenario, and they genuinely want to help. And it's bridging that gap because kind of like we were talking about, like so many times finances is taboo. And so people also don't ever talk to anybody. Yeah, like you're saying, some of the most judgmental people are your parents or your friends or your spouse. And that's a hard place to be, to then try and have somebody to help educate you when you're afraid to even ask the questions.
Right.
But how can community financial institutions step in from a non-predatory place and say, hey, here's the tools and the products and the services that are backed by somebody who cares about you, and here's some education, and let's get you set.
This is the beautiful thing about credit unions and community banks I don't think a lot of people know, is that little things like credit cards, credit unions, I think the rule is 17%, the max interest rate you can charge credit card. Whereas the industry, I think it's up to like 30 or even higher. There are so many similar situations of the product set that credit unions and community banks have to offer are largely more suitable and beneficial to the consumer. And little things like you can get a personal loan with 0% interest for an emergency. Where can you go get something like that? Yeah. It's very rare. And so I think community banks and credit unions have such a great opportunity, not just because they bank half of America, but because the products they offer are generally more suitable and helpful in a time of need. And guess what? That's a match in the world. Your product matches what someone needs. What we need to do is figure out, how do you match that up with someone? Well, you need to know their goals.
Yeah.
And you need to know where they're at in their finances outside of where they bank with you. That's the starting point. So we can start connecting the dots here.
So how do you think, where do we go from here then? Right? How do we start having better conversations with people about what are your goals, and then educate them? It
shouldn't be a conversation. There needs to be a digital backdoor. Like, okay, explain. If you, I don't know, let's think about if someone was in AA. Do you want to be seen going to AA? Probably not. You're going to go through the back door. Okay. If you're struggling with your finances, are you going to go walk into a branch bank location and go ask a stranger what to do? No. So what I strongly believe, there needs to be a digital backdoor, a place where there's a judge-free zone. You don't actually have to have a conversation, but you can get advice, products served up to you in a digital manner, because we're in 2025, like everyone is connected to a digital solution in some way, shape, or form. How can we have a place for people to go to find this information out? Because I don't know, would you go, you did this, you walked into a credit union and you sat down, and maybe I think 10% of people would do that, but 90% of people I don't think would do that.
Mm-hmm. I know I've referenced it before, but I wish I could remember who gave me the context. It was a podcast guest in the past. There's a book called Nobody Lies to Google.
Okay.
And they had a ton of data on how, and they gave examples like you go into your doctor's office and the doctor asks how much coffee do you drink? And you're like, well, I don't really want to be judged.
1 cup.
So I drink 1 cup a day, right?
When it's 7.
And then they promptly go home and ask Google, is 1 cup that's 64 ounces of coffee okay?
Yeah.
Right? And I think it's exactly what you're saying, right? Like they're
Yes.
more willing to be really open and vulnerable when they feel like they're not going to be judged by a human on the other side.
Exactly. That's I think the barrier here is, and the challenge we all have is like, how do you create the smartest solutions that are able to, like Google and even ChatGPT cannot, give you the most perfect financial advice because they don't have all the information. So how do we get to a world where we can do it in that way? That's all of our challenges as an industry. We have to figure this out.
Okay, I'm glad you said that because I think that's also one of the problems that we face is now our financial lives are like so crazy fragmented, right? You think about all the different places that we have money.
Most people have 7 to 9 institutions.
7 to 9, just institutions.
Institutions.
Let alone
number of accounts is like 14 to 20.
Yeah. And across tons of different products, right? Especially in the world you came from, like start thinking about the investments that you may have. Right. And so what I think one of the other problems too is, again, like I hate the traditional way of thinking about budgets and personal financial management. But let's go back to that example that I gave of like the auto loan that I took out at 1.99. Right. And there's a very good chance that the traditional model, if it had just looked at, I'm a PFM tool that runs on Josh's credit union that he has that auto loan through, it's sitting there suggesting to me how I can pay that loan down faster. That's not my goal. I literally took out the loan on purpose to make the minimum payment on that so the rest of my money could go into now, the cost of funds is cheap for me.
Yep.
And the market is a great time to invest in. So this is an ideal time for me to borrow money for certain things and spend my money in this area. But the PFM tool's over here telling me you got to pay that car down faster.
Yep.
Because it doesn't see the rest of my financial life.
Exactly.
It doesn't see, okay, we've got money here, here, and here. Your strategy here is this. Your strategy here is this. And therefore, it impacts what we do here. And that's no fault of them, right? That's running on limited data.
Yep.
Well, yeah, if this is all I gave you data-wise, and all you know about me is that I have this auto loan, then yeah, I would say a reasonable thing to do would be to say, here's how I can help you pay it down faster, right? But if I don't give it access to, well, what is my goal? What is my definition of success? And where are other places that my finances live and how does that play into it? It is really hard to make a very thoughtful recommendation.
Right. And the question I would ask back to you is what would get you to trust that thing to give them the keys to every account you own? Because I think one of the challenges from credit union, community bank, or fintech perspective is we all want more data and to see everything. But how dare we ask the consumer for that if we're not giving them something good in return?
Yeah, totally.
Yeah.
Why am I going to go through the work to connect my 7 to 9 different accounts to you and feed all that data in unless there's
good back
value out of it?
Yep.
So
So
how do
again,
you do that?
another challenge that we all need to solve for.
What do you think the answer is?
I think that we've talked about this, but we have to give people helpful information that they're not able to see themselves. We have to be smarter, right? Hey, I see you have this account that's not earning any interest right now. Did you know you bank at X credit union, you could earn $300 extra a year by putting it in a high yield savings account or whatever. You have to give to get. So smarter insights and recommendations, less judgment, and putting the pieces together in a way that people haven't seen before, right? Like calculators on the internet don't remind you of things that are happening in your accounts. Maybe I should alert this person because they told me that this was their goal, but they're not doing the thing that they need to do to reach the goal. So let me remind them, right? Like, what would I do? I always think about when you're building anything, like, what do I wish I could tell this person if I was hand holding them human to human and replicate that? And that's hard to do because there are so many permutations of the ways that people can achieve their goals, how many different types of accounts you might have. And so it's a hard thing to do. And I don't think anyone has done it yet because there's too many permutations.
Yeah, no, as you were talking, I was just starting to think of even a simple example of, let's say that the goal is to buy a new car. And so that creates a savings account. But at what point does that also inform a notification that, hey, like your credit union has a special rate on used cars right now?
Exactly.
And like now, even though you haven't saved enough, now you can actually afford it because of the rate drop. Like those are two totally separate, but
things that are
one
happening
now.
at the same time and come together. Yes.
But that comes down to knowing what the goal is
You have
and then
to know the
taking
goal.
that goal and permeating it across all the different platforms and systems.
Right.
I mean, this is one of the things that, between us and everybody listening, I think this is one of the things that excites me about open banking, right? Is this actually creates an opportunity for people to feel more empowered to connect their financial lives. And, one of the things that I always think is interesting, and I'd love to get your perspective on conversations you've had with like credit unions and banks is, sometimes when I talk to people, they're a little concerned about open banking and being like, well, then my member's going to share my data and their data with Chase. And I'm like, great, go for it. Let them. Because at least now you're seeing the whole picture. So everybody's on the same playing field.
Right.
Everybody's seeing all the same data. And then going back to what you and I were talking about earlier, like you're the good guys.
Right.
You're the good guys. So now you're armed with the same data as Chase, and Chase is going to come and say, hey, Crissi, we got a 30% credit card for you. And your credit union is like, hey, Crissi, we actually want to know what your goals are before we go throwing some 30% credit card at you. Which of those two things am I going to be more responsive to?
Exactly. It's interesting you've heard that concern. I have not heard that concern. Whenever I have conversations around open banking, what I hear is, I'm not sophisticated enough to ingest this data and do something with it. So why pay for it? That's what I hear.
I mean, that is a big part of the challenge too, right? Like going back to what we were talking about
That's
earlier.
the flip side, right? It's like when you see held away accounts, well, what are you going to do with that?
What do you do with it? Yep.
You're going to get charged, right? For every API call you make on 7 accounts per person, that adds up really fast. And so I think that this is where in lies, like we all have to just take a step back and be like, what are we solving for? Like, what is the purpose of it? And the purpose of it, I think, is consumers and members want help with their money so badly. So badly. Like, look at the data. Like, people are struggling majorly. The cost of living has gone up astronomically. Debt has soared. It's impossible to buy a home. A lot of people don't even know. People think I'm never actually going to achieve my financial goals in this world.
Yeah.
And so
isn't that sad?
It's so sad. And it makes me like, that's why I get up in the morning every single day and work on this. And it hurts my brain because there's no like easy, let's do this one thing and everything is solved, right? It's like really complicated and multifaceted and all interconnected. But somehow we have to figure this out and help people. And guess who's best positioned to do that? Credit unions and community banks.
Totally. I know that's, sorry to get on the, soapbox train with you, but I mean, again, like going back to, especially now as a parent, like I think of just how much the world of money has changed in my lifetime. I'm terrified for what it's going to do in my kids. And I am terrified of what is it going to look like when my kids try to go buy their first home.
Right.
I don't know what it's going to look like, Crissi, but I'm going to have to plan for the worst case scenario. And again, going back to what's your definition of success? Like when I'm long gone, I want my kids to be free.
Right.
Like that's my definition of success.
Yep.
And I hate to say it, but money is a big part of that freedom for them.
Yes.
And so that's really important to me. And
it's really important to
knowing,
most parents. We're seeing that in the data is like the
Really?
second you have a child, your goals completely shift. Completely shift. And now it's not just about you anymore. It's about them and their legacy and the things you can do now for them. And, like, what are all the hacks for them? But guess what? You can't forget yourself either. So what ends up happening is people have 7 goals now, not 3.
yeah.
And that gets complicated. And they, if you want to retire, but you also want your kid to have the 529 account and an account for a down payment on a house, okay, how do you do both?
Yeah.
It's really hard for people to do both.
Actually, again, I'll use myself as a personal example. Just before, and this goes back to what we were talking about earlier, like the just start,
Just start, right.
when
You don't have to solve everything right now, but if you just start a little bit, then you'll get closer and closer.
When my wife and I got married, we knew all along we wanted kids. Like we wanted kids more than anything. Long story short, it took us a long time to get there. But in the process, we opened accounts for them before they even existed. And this was back when, to your point, like we were still working through the managing the paycheck to paycheck thing. Mm-hmm. But I remember at a time, Crissi, where we had accounts for them where I literally put $10 a month in.
Little. Yeah.
But you know what?
It
That
adds
was
up.
10 years of $10 a month, right?
Yep.
And one of those accounts is a super high risk stock portfolio. They have probably a 25-year time horizon on that from when I started it to when they'll actually
Need it. Or use it. Yep.
And $10 a month over 25 years
Yep.
in a super aggressive portfolio
And that's where I think
can be a difference maker.
It's incredible. And like that is a perfect example of what we want people to do. And I will say we've talked a lot about like what we don't like in the industry, but what has been a beautiful thing that has happened in this industry is this world of fractional shares and like, low $1 investing.
Yep.
Is, that the accessibility has come so far to allow that to happen. And so I just want everyone to take advantage of that, right? Like no longer, you need to put $1,000 in this fund in order to get invested, right? Like you can do $1, literally $1 and get a fractional ETF and, get started. And I want to figure out how to take advantage of that. Going back to the stat we started with, why are the same amount of people investing today as 30 years ago when we have all these amazing innovations?
Yeah.
Why? Because people don't have the discretionary income left over or the education.
Well, and that I think also comes back to what you started talking about with just like everybody wants to know what are the trade secrets. And you're like, well, yes, there are some trade secrets. And unfortunately, sometimes those do live in walled gardens, but they're also not like crazy trade secrets.
They're not.
Like, these are really things that people can employ, but it's just, but we've got to teach them to people.
Right.
I don't know about that if I don't know about that.
Right. If someone saw, in a bookstore, modern portfolio theory, and then some like new fiction novel, they're not going to grab modern portfolio theory because it's boring and complicated and the jargon in there is ridiculous. Like who wants to read about volatility and, sharp ratios and correlation? Nobody. But guess what? Can we literally it's like gonna be like, I don't understand. That's a whole nother language. But what if we explained it as modern portfolio theory is a low cost, low risk way to get invested for the long term? And you figure out what your goal is, how many years you have, you set a risk against it, and you pick a dollar amount and you go. You just reframe the whole thing. Then it becomes much more palatable and accessible to somebody who may not have studied that in school.
Yeah. And I think, again, this goes all the way back to helping people even just like have conversations about goals. right? Like even just starting there so they understand, oh, okay, if that's my goal, then maybe this principle applies here.
Applies to it. Right.
Yeah. I'm curious what your thoughts are on, again, I've talked about this in the past. One of the things that drives me absolutely psychotic is how much freaking bad financial advice there is on social media.
Oh my God. And everyone's
Dude,
turning to
it's
TikTok and
terrifying.
Instagram.
Yeah.
Everyone's turning to that because it's easy and it's there and everyone wants to know. They want to know. What are the secrets?
Yeah. I actually, this episode's going to air probably right after or one after. I had two awesome ladies on the podcast as dual guests, and we were talking about credit score. And I had a woman from Fisk University and talking about credit score and just the impacts of that. And we got down kind of the same path, Crissi, and we were talking about the example that drives me nuts is like you actually see real examples of these 22-year-old kids that go and rent a Lamborghini from Hertz, park it in front of somebody else's mansion, and then film content saying, if you want to get rich like me, follow my advice. They have no advice. And it's actually the things they're talking about are illegal.
Yeah.
Right? But here they are making content. And could you, like me as a 23-year-old kid who loves cars, if I'm watching this TikTok and they're like, want a Lamborghini? I'm like, yeah. Like, here's how you do it. I'm like, okay.
Yeah.
Right? We all want that instant gratification, get rich quick. And if somebody's peddling that idea on social media, it's really attractive.
And
that terrifies me.
It's terrifying. And we ask people how they feel about money. And it used to be shame, anxiety, some security. Envy has increased.
Oh, really?
And it's because of that.
Yeah.
And it's really easy to fall into that. Like, even as a mom, I see people on social, like, they have it all together. They've got makeup on at drop off. And, me at drop off this morning, literally the dad who dropped off next to me was like, "Are you okay?" I'm like, "No, I'm not okay. And thank you for telling me how awful I look right now. I mean, the same thing I wore yesterday. My kids didn't sleep last night. My husband's traveling. You want to know what's going on?" Like, perception is reality kind of thing. Like, I don't think I like that social media has brought awareness to personal finances, but it's not a trustworthy source. And everyone is looking for a trustworthy source of financial wisdom.
Crissi, this is maybe if you agree, you can help me with this. But I've been like preaching like crazy. I want to see more credit unions doing TikToks.
Yeah, amen.
Like, call me crazy, but I want to see you doing TikToks, and I want to see you out there giving financial advice because people are going there. And whether you like it or not, that's become a medium where people are consuming that content, and they can either get it from some knucklehead who's trying to like peddle some advice so they can get followers and they can make money.
Yep.
Or you can get it from a trusted source like a credit union.
Mm-hmm.
Right? Like, I would way rather see that.
It would be great. Because I think that, if you look at the trust data, I forget if it's JD Power or someone else. I'll have to look up the source. I'll send it to you after. That polled Americans on how much they trust the financial institutions that serve them. Credit unions are always at the top of the list with like 60 to 70% trustworthiness. That is huge. That is a huge differentiator.
Yeah. I know. That's a whole nother podcast to get me started on my diatribe about marketing.
I should wear a shirt. I love credit unions.
I know. Crissi, I'm that total obnoxious, like, Lyft passenger where anytime I travel for work and I'm like in a Lyft, I always end up talking like, where do you bank and why?
Yep. Well, it's someone on our team. He met a nurse who comes to his house, and they ended up got to talking, and she's like, "Yeah, I banked at this credit union for 3 years. It's not even in California. It's in Indiana where I grew up, and I'm never leaving them." Like, you hear these stories over and over again. It's so amazing.
Yeah. Well, and like you, it's like once you get that once I know the power of what that can do for somebody's life. I was in a Lyft a couple of months ago, and I got to talking to some guy, and man, like, we went deep. I got the whole like sob life story, the whole 9 yards. And literally it snowballed into him talking about his financial life and
Yeah.
all of this. And, you know, and I was able to share it with him. I was like, hey, I'm in town visiting my credit union customer. You should go check them out. Right. And he was like, I didn't even know that this was an option. And I started telling him about it. He's like, why am I not there? I'm like, it's a great question. That's why we're talking, dude.
Yep.
You know?
Exactly.
So it's like, I get it. I'm with you. It's like once you see how much of an impact it can have on people, it's hard to let that go and not want to be able to share that with people. And, you know, I think it's really cool what you're doing, Crissi. Like I've said this, I'm not going to be shy about it. I think the concept of actually talking to people, like people, asking them questions before just giving blanket advice and kind of looking at their entire financial life and saying, your definition of success may be different than this person's, but I'm going to help you both get to your definition of success. I really freaking love that. And I think you're onto something.
It's simple, right? I mean, it's like, I'm like, we just ask people what they're trying to solve. Then maybe we can solve it for them.
Yeah.
The problem is doing it scalably and digitally is the challenge, but that's the fun. And that's why you, as a founder, you take on these big, hairy problems.
That's why you quit your job and plunge yourself into chaos.
You quit your job and then pop out 2 kids and then wonder what the heck you got yourself into.
Well, yeah, like I said, I may be one voice, but I think you're doing some really cool stuff and you should be proud of what you're doing. And I think you're going to make an impact. So
thank you. And we can't do it without our credit union partners. We can't do it without our digital banking partners. I believe in we all have to come together. It's not going to be one company or one person.
Oh, yeah.
It needs to be a movement. And I'm really, really passionate about that.
You know, you're right. I've said this before. It takes a village to raise financially healthy communities. Yeah. None of us are going to do this alone. It takes every single one of these elements. But I think what gets me so excited and wakes me up every day is we really do work for the industry that is going to be that village. Like I believe that. Like I want to, going back to like when I'm long gone, I want my kids set up for success. And that looks like I want to make sure that there's community financial institutions for them to bank with.
Right.
Because I think that that's going to make an impact in their future. Exactly. And so it's like core to me to make sure that industry survives, thrives, and is able to add the value that they do. Because I think it makes a difference.
Totally.
Well,
Couldn't
Crissi,
agree more.
It's been a blast and a pleasure chatting with you. Before I let you go, I got 2 final questions for you. So where do you go to get information? Like when you're learning about how do people think about their finances and what impacts them? Where are some of the places you get some of your data? Where do you do some of your learnings?
Yeah, there's so many studies that there's some banking in customers who publish studies about people and do it with a huge set of data. Like Fidelity publishes data about people and their finances all the time and investing rates and some of the things that I described. Bank of America publishes one, JP Morgan publishes one. So in terms of the industry data I was quoting today, it's a lot of financial institution-led reports. The Financial Health Network is the other place that's a more, I would say, unbiased source to get data about people and their finances. And then I'd say for me, where I've been spending most of my time getting information, especially in the credit union industry, is the CU Times daily newsletter. I don't know. Do you get that?
Of course.
It's awesome.
What
It's
do I
just
look like?
great
A rookie?
to know. I know. It's just so informative. It's so helpful to see from a bigger picture, like what is happening from an industry level, from a particular credit union level, and then from a fintech perspective, fintech futures daily. This is always good we all have to learn from each other. And that helps me to see what is happening on the innovation side of things from a tech perspective.
I love it. That's awesome. Last but not least, if people want to just connect directly with you and chat with you, or if they want to learn more about what you're doing with Penny Finance, how can they do that?
LinkedIn is the best place. I actually look at every invitation and every message that I get, even though sometimes there's 100 of them in there. The spelling of my name is Crissi and last name Cole. And you can find me on LinkedIn and I will always reply to messages there.
I can confirm you do, because I think that's actually where first connected with you. Although, shout out to a mutual friend who I'll keep her name off the air, but a big thank you. You know, one of the other things that I love about this industry is the concept of, hey, I know this cool person and this cool person, and the two of them should meet. So that's kind of what brought us together. So you know who you are, and big shout out and thank you. Well, Crissi, thank you so much again. Like I said, I'm not going to be shy about it. I think what you're doing is super cool. I think this is a huge area of opportunity for community financial institutions to really live what they preach and have some tools to really help people in a very specialized way, as opposed to just a very black and white blanket approach. Yep. So keep up the good work, and thanks for coming and being a guest on the Digital Banking Podcast.
Thanks for having me. It's so good to see you.
Thanks, Crissi.
Thank you for listening to the Digital Banking Podcast, powered by Tyfone. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you get your favorite podcasts.